Welcome to TradeNBI.com. This is Jonas Portis for the 25th of February. Well, what a day it was. So a little bit of skirmishing breaks out in Ukraine. Our market takes a major nosedive, and the plunge protection team pops right in there. And even in the video I was talking about when this low broke, that the move would be to try and push back up towards the break of the low, which that's very typical. And once we got there, that kind of pretty strong bid going from there, and that's that cross of magenta over yellow. Still not much of a spark from that, at least from a sustainability standpoint so far. You got steel rising, but we didn't see the orange continue its move lower, which below that 7.5, definitely more bullish, like when it happened here or even further back here when we had that nice run up. And we still have midterm buyers in green and that fading, and same with the shakeout. So that's a bit more problematic from a bull standpoint, but they've been buying the dip since, it first started up here at 50% and then below, and then 23%. They were buying that dip, and obviously buying the dip at the zero, and then those that couldn't survive all that other previous buying bought further down, theoretically. From an NQ standpoint, it already had broken the lows, so it was a bit weaker, but there's that crossover. Now what we'll be looking for is the magenta moving above white. Any pivot lower, though, of the magenta MBI at this particular stage, without a corresponding dip of orange going back, is a clear sign to attack the market back short. So I think that becomes rather obvious opportunity at that point. And again, early flight to quality, but then that moved into stocks and that drove yields higher, and I would expect that's going to continue lower. Some thought that there might be an expectation the Fed won't do anything given the turmoil, but the Fed's doing exactly what it wants. This higher level of volatility is certainly going to move people to the sidelines, which will put them into safer, less volatile assets, and that which ideally drains a little bit of that flowing liquidity. Gold, huge spike up, but sold off most of that. Not too much of a shock with that. There wasn't really any reason for it to go that parabolic. The sanctions and everything that they're doing to Russia are no different than all the other sanctions that they've done. They're still part of the SWIFT transaction programs, and that. The biggest loser is Europe, because Europe requires a lot of petroleum products from Russia, and at any point they're vulnerable. And that's exactly why the euro took a nosedive, actually broke out to lows down by the 111 range, so that was pretty brutal sell-off from just where we were. And don't expect it to get any better. I'm still looking for it to be somewhere in that 108 to 114 range, pivoting back and forth. Because the Fed really has to defend around that 108, because anything lower than that, the systematic risk that exists within the Eurozone, and literally the Eurozone is bankrupt. So, because the ECB is not the same as the Fed. And in that dynamic, there's kind of a real problem, because all of their debt is basically toxic as well, even though it's being held by the banks as, prime collateral. And it's just a Ponzi scheme at that particular stage. You just have to hope that someone else is willing to buy them, but the rest of the world is not all that interested at this particular stage. Oil, it spiked to its high, but still, this elevation is critical from a U.S. inflation. I mean, LA, and that $6 gallon gas, that ripples. Speaking of ripples, Bitcoin, as soon as the market caught a bid, lo and behold, so did Bitcoin. But right between, perfectly to that 34, with the previous high just shy of the 39, again, it hit it again and rejected back off of it. But we can see a nice build in the shakeout going in there. Real positive extremes on these last moves, so if that fills back in, that would be normal to kind of retest towards 50% pull back there, and then start to cycle back up again. And from the 50K, as it evened out, you had that critical move right here. I would say the earliest part from a positive standpoint was this pivot right here, where it moves back upward above white instead of dipping below the yellow MBI and continuing, and plenty of dips of the orange DOC here underneath red, and when those occur, you know you're getting positive action. And so even back and forth, once that takes place, it's still kind of held at 23%, so it gave plenty of opportunities within that while it kept going back and forth. And when it did dip down here, in this particular case, you had white continue its pivot. If white had been spiking up, that definitely would have been an indication of weakness, but no, it immediately reversed. Programs bought that, and boom, that was a nice ride all the way back at where it was at 42.09. So already over 50 points for that quick run. Intraday, just a massive amount of movement back and forth. So we had these nice long drawdowns, and it was a full day of trading even before the market opened. We didn't get open until all the way over here, and that's how much pre-market action it was. So there was just a lot of activity. Nice range moves for the short side, turnaround buys. Those were usually the strongest, and it had the biggest power. They were usually pretty incredible, all of these straight up moves right there. And then it was just a matter of, oh, okay, we're under positive extremes. So like here, yep. So at least at that point, get a clear idea what the positive extreme rollback's going to be. So a lot of these I was attacking early on when we began to fade below magenta 33, particularly if white was spiking in those cases, even slightly before DOC spreads in those particular cases, just because I knew where the positive extreme fill was. So it's one of those where you can get a little bit of a head start in my view. Because once this entry came in here, I'd be a little bit more concerned because that is the fill of the positive extreme. And this jumping back and forth, I would expect to move back up to the highs. The fact that it failed was, I think, just more a coincidence of how weak the day was in general, and people were just collecting returns. But every time we had these moves, though, you can see we're putting in a couple of positive extremes and filling them all nicely. So I was very pleased to see all that action taking place. And then as we got a little bit later to the afternoon, market felt satiated by the comments coming through and how forceful they were. But again, positive extremes filled them back 50%. So these are basically moves breaking to new highs, and then when the sell signal comes, hitting 50%, basing on it, and then starting the next run. Now, what's interesting with these is we've got a couple of series of positive extremes. 4208 range, and the next segment started right up here, which I would say filled pretty quickly up to 24 with that back and forth, and so that just leaves that lower level right there, and then you have the last run that took place right before the close, which is at 42.43, and that's most likely to get filled under weakness within that setup. So that's the long and the short of it for now. And as always, though, any additional items, I will update you and put them on Skype chat. Trade well.